following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And how about this thing in Turkey, huh? Man. But we have to be tolerant and embrace and accept all these... And for God's sake, don't use the word Islamic terrorists. Never use that word. It's bad. It's not cool. Unbelievable. Be tolerant. Incredible, huh? Here's the best trade on the books, guys. The 10-year. Best trade on the books. The 10-year. I'm going to say it twice. As we look at the 10-year, this is the September contract. This is the real super cool type of action you want to see, especially with the S&Ps now reaching for 2054, which we're going to talk about in a little bit. You want to see this flag pennant type action while the S&Ps are doing a moonshot on the 10-year here, and you want to see a 240 profile kind of continuing to regulate this thing up, and you want to see an ability to play defense below 133 general area. Those are the three things that you'll love to see line up. The S&P's going straight up, the classic technical analysis pattern, and the profile. I hope Tom's listening to this. This sounds pretty good this morning. Very cool trade right now. I don't have to tell you guys this, but we get any type of pullback off of 2054 in the S&Ps, which is what we're going to get right into here. 2033 is a big number. I didn't play around with it because this daily profile, I mean, you know, I think we've got a DMZ. We got to be aware. We got super big volatility, 2033 and 2054. That's the top of our, and we'll hit the 30-year in just a second, Mark. This in a volatile environment, you got to kind of pay attention to a couple of different inflection points at the same time. And I understand this is a 20-point range, but that's what volatility kind of predicates. And I didn't want to play around with the 2033. If we get back down below there, we never reach 2044. I'm going to be. Can I say the word? I can't say pissed on the air. I might be upset. Okay, we're going to delete things as usual off the Global Market Pulse later. I'll make note of those edits. But anyway, 2054, we could get a little bit more lurching forward action up into a little bit higher. I'm going to wait a little bit this morning. The market may open. We may kind of get some people flushing this up a little bit farther, but we'll see about that. If we get back down below 2033, I may want to start looking at that as a chance to sell, but I for some reason I feel like we're just going to continue to edge higher a little bit here. I tried some shorts off of 2014 yesterday, that general area, had a chance to take them off, just was hoping for 2002. That didn't happen. I personally got stopped out of this yesterday. So now we're looking for the next leg up, and that's, you know, we talk about this on the show all the time. Take the medicine, move on. It only hurts for a little while if you got the stops in. And you know, we're always looking for leverage points, the regulator of the trade down in this case. You know, we're looking at our breadth calculations, and I'm going to show those in a bit. Yes. The plan is always to drink early. Of course it is. Here we go. Let's take a look at the scanner. We're going to get that up. You know, I wonder how tolerant the, talking about tolerance, you know, we have to be tolerant of the community that's attacking us. I wonder how tolerant they'd be if we put a Muslim-friendly gay bar beside every mosque. I wonder how that would sit, if they would be tolerant of that. We could call it special packages. A Muslim-friendly gay bar next to every mosque called special packages. Or you Mecca me something. Here we go. Let's take a look at the S&Ps. I've got some other names if you want to hear them later. We probably can't say those when we're broadcasting. We'll do it on the break. Here's the S&P breadth. We're still relatively negative on the weekly and the daily. Excuse me, guys. Sorry about that. So I'm looking still for inflection points to hit here on the short side. And those inflection points we talked about, the 54 would be the top of that range. I'm going to try to start getting in a little bit early on that one. I don't know if we're going to reach the 54 area, but I think we're in that overhanging supply type area right now. We're going to talk about Alcoa in a little bit too. Crude oil. What do you do with this now? I don't see a lot of leverage right now on crude oil. I think we could possibly come back and retest 47.58 that we talked about yesterday. And that's, if you're looking for a day trade, that might be the opportunity here to trade off of 48.45. As you see, we kind of gone up there and kind of come off of it. But again, we're always looking for areas to play defense. We're always looking for areas to play defense, and you've got one there. But again, you don't have any long-term leverage here. You got that big move up that I just was too stingy to actually get in. Backing up the truck at 45.66. I'm ready to jump off a cliff on that one. How about Infidelicious? How about that for a name for the gay bar? How about that? Anyway, let's take a look at gold. Here we go. Nobody caught that. Cool. It's really terrifying to be short gold right now. So again, you're blocking out the short side. A little bit of a bounce this morning, but I don't see a lot of leverage in gold right now. I think, this thing's just going to churn around. So I think this is somewhat of a no trade also. Let's take a look at the dollar really quick. And this is the cool thing on the dollar. You've powered up, you've come back. We talked about the retest of 95.76. We're there. We've reached it this morning. 95.85 we've hit, and we kind of coming off that a little bit. Let's just show you the daily. That's where we've hit this morning. 95.85. That unfair high is 95.76 on the dollar. I like this pattern here, that classical pennant flag type thing, and we're coming back to the top of the profile on the weekly. This, as well as the 10 years, a decent situation to look at because you can play defense very well on these particular trades. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, and I didn't think about that. We could open a branch of Ralph's free pork for everyone, as a tolerant kind of experiment next to the Moss. How about Turban Cowboy? How about that one? Silence. Anyway. Here we go. Let's take a look at Asia really quick. I'll say it again, Turban Cowboy. Pretty good. Okay. Here we go. Disconnected, there's really nothing to talk about there. I don't even know why I pulled it up. It's just a complete, rigged situation. Here's the 30-year, similar situation on the 30-year. We talked about the 10-year earlier. Here's the daily on the 30-year. If you're short, you're thinking, my God, why am I going to suffer through another run up with this thing? I mean, I tell you, very concerning if you're short. If Jimmy Rogers is still in this short, I'm gonna have to, console him on that trade. It's like that guy's been short treasuries for 10 years. They've done nothing but go up. He's in a little early. What do you think? Anyway, keep continuing to go down the list here. Let's take a look at silver. Decent run up yesterday. Don't have to tell you guys about that. And the cool thing is on silver now, you got some, and we talked about not being short gold or silver. Silver's obviously done a pretty good job lately. Now you've got 1806 as support on silver. Now I'm sure Larry will be speaking about this in detail, but that's the way I see silver now. Just like, gold, the 10-year, silver. These are still kind of fear instruments out there, and that tells me pretty quickly that when we look at the S&Ps and we look at this breadth calculation and we look at these inflection points, you're still looking for areas right now after that big pullback. You've got a nice retracement now, and you knew that was going to happen at some point, but you got some chances to play defense again pretty solidly here on the S&Ps on the short side. And again, if the S&Ps come off, 10-year rallies again, you got some decent little trades here, but not the free trade, but the real, it's not, again, you might not get the bang for your buck if the S&Ps pull back, but the 10-year just kind of sitting there, not wanting to go down. It's not like you discovered that mystery. There's a lot of people looking at that, and there's a lot of people saying, I don't need to short treasuries right now. If the market comes off, you're going to see a decent little pop there again, in my opinion. Let's take a look at the grains really quick. November beans, we always take a look at this one. Not a lot of leverage here. I think we reached our kind of retracement targets yesterday. There it is. You've got another buy point here at 10.95 on November beans. All right, let's hit some of the bellwethers here, see how they're acting on the bounce. Apple. Talked about this one reaching some targets down here at 91.76. That happened. We're bouncing up a little bit. We talked about a little bit of a trading bounce opportunity around that area. You got that, so now what do you do? In my opinion, any retracements, you're trading 94.07 pre-market. Let the market open. If this thing gets back into 95.12, I think you just completely do the whack-a-mole thing and just hit it again. And we may go down and revisit that 91.76 again. You got to have, hopefully market help on that one. Let's take a look at Alcoa. And for guys who have been trading this, let's just go back to the weekly here. Get this spread out. Come on, e-signal. It's like I think they slow the e-signal down somehow, get into my machine when they know I owe them a lot of money. God, I hate exchange fees. When is that going to end? So you got decent support here around 9.29. Obviously, a little news out this morning. They may be splitting up the whole scene on Alcoa. I think you can use that for a little while. 9.29 is support. Play defense around that. Take a look at Amazon really quick. All right, so we got into that 2 days ago. We got right down into that 678 area, reached a low of 682. Again, on these really noisy situations, you've got to give yourself a little room there above and below these major inflection points. And if you've been playing this, you get, what is this? 37, but what are we trading this morning? 712. So you've gotten about a 30-point move in Amazon from around that situation down below on the weekly unfair lows. If you guys are noticing that, it looks really cool. It looks like it touched it, but it actually didn't. Could spread this out. All right, we're going to take a look at Intel really quick. This is one, obviously dividends, the whole 9 yards included. 30.84, I think you can play defense here on the long side. But again, this is not going to move tremendously. You're trading 31.45 this morning, so you got a little bit of a pop. I think, you got better trades out there than Intel. I had a couple of emails about that. Let me just look at Netflix. We're going to hit Tesla. Then we're going to get into something else after the break. Netflix, we've rallied back up into that place that we kind of pierced below. You got 88.35 and 90.47, that DMZ to kind of get short this, in my opinion. You're trading about 89.68 right now. So you're getting a little bit higher this morning. S&Ps may reach their apex this morning and then start to kind of, all right, we had the bounce off of the massive sell-off. We had the retracement back up, and then you've got some of these stocks that have been relatively weak lately that may have a chance. If the market continues past 24.54 on the S&Ps, a lot of these stocks that have shown themselves to be weak, and I'm not looking at this as a triple bottom type look on Netflix. I'm looking at it as a relatively weak stock in a market that had powered up recently. and just retracing empathetically back up with the market. And hopefully if the market goes higher, this is the type of stock that won't move higher. Let's take a look at Tesla really quick. 204.75 this morning. This is the cool news on Tesla. We had the new profile up here yesterday. We kind of reached into that apex. I think you can use this to play defense on the short side to revisit 190, 146. That's the view on Tesla. I hear the music. As we go to break, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. How about jihad instead of jihad? How about that one? We're trying to think of names for the bar right now, if you guys are joining us late. Anyway, let's take a look at the euro, or G-hunk. Here we go. But we don't serve alcohol at that bar. But we might have virgin drinks. How's that sound? Anyway, take a look at the euro. As we look at what this thing has really done, the sell-off. It's very similar type action as the S&Ps, interestingly enough. So what do you do with this thing? I'm such a partial person towards shorting this. And the good news is now, I don't know if we're going to get there. It would be nice. 111.41. That's a 240 unfair highs combined with that big POC, that big, relatively wide profile POC around 111.43. We've reached a high of 111.16. I don't know if that's going to be hit, but I kind of hope it is. I've gotten stopped out of this trade a little bit. I was trying to get into some shorts. I'm a little stingy on this because obviously it could run up. But 111.40, that general area, 41, 43, that would be something to really take a hard look at on the short side, in my opinion. Remember, this kind of sell-off consolidation, we may have a retest down below. I don't really understand how the euro is even holding up as it is right now. But that's my take on the euro. British pound obviously stabilized a little bit here. Here's the 240 situation on the British pound. We broke above this 133.46. That's to be looked at as a little bit of a short-term support situation, but I think long-term scenario, we're probably going to go back and easily retest 131.76 on this particular trade. Japanese yen, again, I'm a lot more partial to trading this from the long side up into 105.50, 105.40, that general area. Why is this the case? That big number 101.33 was hit. That 105.50 general area was a big deal before. I think, again, with the trend down on it, the valuation of the yen, a little bit more of a scarier trade. If you kind of trading it right by the book, you're supposed to still be looking for short opportunities on this. But the next short opportunity would be around 105.50. That was a massively big area before. And I think we could revisit that area. Take a look at the Australian dollar really quick. Get this over here. So there's not a lot of leverage on this, and we're going to kind of move on past the Australian dollar. Here's the Canadian. And again, crude starting to move up again. This kind of makes me think that crude might not be the best long in the world. The Canadian dollar is kind of becoming a little more devalued, but starting to break down below 240. So I don't see a ton of leverage here. I think we could easily retrace back into this 128.50, and you've got a place to play defense now, 130. So, got a decent risk reward there, about 150 pips. We could retrace back down. Let's go back to our other screen here. Take a look at the XLU. This is this really smart dude who was on the TV the other day talking about getting out of all your XLU stocks and piling into the other stocks, dismantling your hedges and going for broke. Well, if we take a look at this long-term view on the XLU, amazingly so. This is, again, 10-year-ish beneficial, if you will. Another factor on being long the 10-year. These utilities not slowing down, the thirst for yield there. Everybody seemingly understanding that this may be something a lot better to go to than the treasuries, piling into this still, and a little bit of an indicator to me that this broad stock market may still be in danger here. And going back to the S&Ps, we were kind of just, if you're watching the show late here, talking about getting a little bit higher to start looking at this from the short side. Let's go right into the scanner. Let's look at the utilities. And as we look at this, you see just a sea of green. Some of the stocks, a very small amount of the stocks here. Let's just take a look at NRG. Some of these stocks are not the ones to be in. without question. NRG rallying back up into the unfair lows. This is possibly a short opportunity on that one, but again, I think the sector still has some legs to it based on all things we've just talked about. I mean, what do you buy in this particular group? Let's take a look at some of the ones sitting on inflection points here. This is probably not one of the ones to buy. AES, Duke Energy, right in the backyard here. Here we go. Places to play defense here. I know you're like, God, man, am I the guy that's going to buy the high print here? I don't think so. I don't think so. I think this sector still has some juice in it. Let's go back to the ETFs for a second. Let's go back into and let's look at technology. So this is the XLK. Concerning. Let's go back and look at the NASDAQ really quick. September. All right, so if we can get the S&Ps a little bit higher, the NASDAQ may come up to this 43.39 general area. And then you've got an insane place to play defense with considering that the tech sector here, looking at the ETF, just still problematic to say the least. And let's go to our friend, the energy sector. All right, so you're going to have a little bit of a mixed bag on this one, and you've got some stocks that can really be showing some kind of clarity here on the short side or the long side. A little bit of a bounce in crude oil lately, but let's take a look at a couple of things that we have gone to in the past. SWN, really decent move yesterday. I don't have to tell you that, but just coming up into short-term resistance and weekly. So this particular stock's rallying back up into 14.15. I think crude's kind of a mixed bag right now. You may have a little bit of a day trading opportunity around this 14.15 general area, and you've also got it kind of coming up into the printing already this morning, coming up into those unfair lows on the 60 minutes. So again, got some resistance here on SWN. Maybe a place to play defense. To never shorted this stock. It's always been something to try to buy the dip. We're going to be right back, folks, and talk about that a little bit more.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And somebody in the den wanted me to look at BT Group. And seems like we could have found something a little more exciting. This looks really boring, this price action. I'm just kidding. Wow. I'm scratching my head. Let's take a look back in time here just for a little bit before we start talking about this. How's the liquidity on this thing, Paul? I don't know if this is a real look. It doesn't seem terribly liquid, but this is the deal as I see it on BT. You know, obviously, seemingly not a lot of market relevance here lately, but when we break like this and then we kind of do the dead cat bounce and then you've got a profile, wow, island reversal the whole 9 yards here. That's interesting. When you have a profile appearing above price action, and this morning, what are we printing? 27.59. So, and here's the 240 view. My God. Okay, here we go. This is bearish in nature here when we have a profile appearing above price action. So, I'm not super excited about getting long this thing if that's what you're asking about. If you're asking about going short, I think you can play defense a little bit above 27.10 on this particular stock. But again, this is kind of a crapshoot at best right now. It's just all over the place. And you want to see some kind of volume and consistency in a stock. You know, profiles are really determinant upon, again, going back to square one, volume at price is how we calculate these profiles. And I try to use them on 4 different time frames. I rarely talk about the 60-minute because it's not totally applicable, to do a show in the morning and then talk about a 60-minute, and then that's kind of out the window by noon a lot of times. But, just looking at this and gazing across it, put a gun to my head. I'd rather be selling resistance here because that profile appeared above price action. I hope that's okay, Paul, for an analysis there. God, man, what a wild ride lately. All right, let's take a look at IBM. Trading 146.80 this morning. This is one, again, had really been compressing up, which was scary for the shorts before the market broke last week. But now we're coming up into big-time support. We have never closed on a weekly below weekly support. That's concerning to be short, but to try to jump the gun here. But I think the market may be reaching some type of an apex here on the broad market, on the S&Ps, on the rally back up. I'd still, really be looking at this, trying to play defense around some kind of noise level above 146.26. Even though we're trading 146.80 this morning, we could. That's a real print, yes. We could get back down below there, and then you'd have a chance to play defense. What was that sign? Don't know what that was. All right, so let's go back to the scanner really quick. Let's go into the S&Ps, and remember, you've got a chance if you want to look at just, if you've got an account at a place where you can trade quite a few different exchanges at the same time, you can do some analysis like I'm getting ready to do on quite a few different indices across the globe at the same time. Just put them in the hopper here, and they'll come out the other end. So let's take a look at something. Let's just take a look at what's kind of hovering around weekly unfair lows. And this is kind of interesting. And then let's see what's hovering around daily unfair lows. So you've got a basket of stocks here, Alcoa namely, and we talked about this maybe, and this doesn't mean that we're looking at these from the short side. These just mean when I'm doing this particular sort that they're at a precipice. So Starbucks, Wynn Resorts, Alcoa. Let's look at those three. Alcoa, Starbucks, and Wynn Resorts. So let's take a look at Wynn Resorts first. And a lot of institutional people look at this product as an idea machine. All right, it gives them ideas. They're always looking for things, trading ideas where they can put some money to work, make some commissions. I'm just kidding. Basically, trade ideas. So we're at the unfair lows on Wynn Resorts. We've broken down, kind of similar chart to IBM actually. And here's the daily situation here. So again, this morning we're up a little bit, 89.97. We're back up above these areas. So in essence, what this sort's doing is it's saying, hey, I want to be able to look at two time frames that are lining up, at least the bottom of my profiles in that same general area. Do I think you have better shorts out there than this? Absolutely. Do I think the market's going to rally up a lot more? No. So we're looking for stocks in this case in that bottom sort that have kind of already gone below and rallied back up. This is not the case on Wynn Resorts. So let's take a look at Starbucks and see what that looks like. Now this is a different story. We're trading 55.27, so we've already pierced, the weekly unfair lows. We've closed below it last week. We're coming back up into it. This is a lot more attractive situation, and especially because we've got now this is a little bit more up my alley. Even though we're kind of gapping up this morning, a little bit. We've got a profile that appeared above price action. That's bearish in nature. You're coming up into those weekly unfair lows. If we can get a little bit of a pullback this morning after the market gaps up again on the stock market in general, you've got a chance to play defense with stops above, let's just call it 55. Let's just go back to our scanner for a second. On Starbucks here, I'm going to show the landscape view. This is the level of the market. This is where we're at pre-market right now. So we've got 54.92 here, 54.92 here. If we can get back down below there, and I would wait because the market could continue, the market's going to do what the market's going to do. It does not have to follow some of the things that I say. If we get back down below 54.92, I think you've got a chance, a little bit of market help, not a lot of risk on this trade for us to kind of settle back again on Starbucks. Let's take a look at that. We've already looked at Alcoa. Let's take a look at ABC. Let's take a look at this one. And again, just putting some things on the radar screen that are relative to profiles. That's ugly. I think you got a low risk trade on this one too. And I like how, again, we had a profile appear above price action. We're kind of rallying back up into that inflection point. Are we trading 77 pre-market? Let me see here. Nope, no prints this morning yet. So again, this one may be something you could play defense against too. I don't really, that's not the best sort that I generally like in these conditions. Let me do this. Let's see what's trading below profiles and it's coming back up into, daggone it, it's not happening there. We're going to do another sort when we come back, folks. It's going to put some more ideas on the screen.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. And we were using the scanner to try to find some ideas here. We were looking at using some of the instruments that might have been rallying just back up into, I'm sorry, let's do the sort here correctly. Below profiles and then rallying back up into the bottom of their daily profiles. That's another sort we're looking at. Darden Restaurants, Gilead Sciences. Let's take a look at this one. See that? Trading below profiles on the weekly, rallying back up into an inflection point there. And you can, do these custom sorts like you want to, but you can also, I mean manual sorts. God, I hadn't had enough coffee this morning. That bit about the putting the Muslim-friendly gay bar next to the mosque this morning as a way for them to test their tolerance has got me derailed a little bit. And we had some good names there. You Mecca Me Hot for the name of the bar, Jihad. And we're not going to serve alcohol at these bars for the tolerance. We're only going to serve 72 virgin drinks, if you know what I mean. So as we look at this, downtrend reversals, you've got a lot of different custom sorts over here that we put in. Actually, you can look at downtrend reversals might not be a bad one. I'm sorry, uptrend reversals might not be a bad one in this one. Stocks that have kind of rallied a little bit, that are starting to break down. Taking a look at PepsiCo, Again, this is a nice one right here. Broke down below, profiles on the daily, rallied back up into an inflection point. A lot of different opportunities on here using the custom sorts. Turban Cowboy. We had that one. Not a lot of response on that one for the name of the bar. Jay, we're going to keep our day jobs together, if that's okay. Stocks that have been in a downtrend, hitting this key, there's quite a few here, but we can also look at stocks that are bucking the trend. Porkies, that's a good one. A lot of stocks here that you can look at. If you're looking at stocks to buy still, which I'm thinking that this is not probably the way to go, you've got a lot of stocks here on this particular list that you can look at to try to find stocks that may be showing support on the profile. So let's just take a broad look at L3 Communications here. This is one still in a defined uptrend, and we've got a profile appearing below price action here, and we've got a place to play defense, 140. I'm not super excited about buying stocks right now. So, I wouldn't be looking at this particular sort. Profit taking, as they say in North Carolina, taken. It's funny how things change when you move back for a while. Adobe Systems, this is one, again, you got a new profile attempting to appear. You're going to see that today in Adobe Systems. You've got a weekly unfair low sitting there at 93.14. So getting back above there will put this in kind of, buy opportunity. You've got that stake in the ground demand area on the daily. But again, right now, I'd stay away from buying the longs, the long opportunities. Here's the situation. 3M, let's take a look at this one. That's wild. No, I'd stay away from that one on the short side too. Let's take a look at this one right here. PCG. All right. So again, this is a stock that's in the. God, are we out of time? Guys, stay tuned for Larry and all the hosts on TFNN all day. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.